So the job market really hasn't been as good as Powell likes to tout anyway. And once he gets smacked in the face with some data points, a couple more reports like today on the job market, then suddenly these two voices on the Fed are going to be 3 or 4 voices on the Fed, and he's going to look like he's in an awkward political position, because at that point he's got enough Fed members telling him, shift, do what Trump says, because we agree with it, and in which case he's going to look political if he doesn't start cutting rates. Because if the data points head south, then he's got no excuse not to cut rates. Anyway, so I consider all that stuff really a lagged indicator. In other words, what the economy does will occur, but it'll occur after the market has already smacked you in the face. And I'm not so sure how deep, economically speaking, not just market, but economically speaking, this downturn in the U.S. stock market bubble will be in terms of everyday life. Recession can be thrown out there, but, I'm not so sure that it couldn't be worse, because, again, we have the biggest bubble in U.S. history. And if it expunges the errors it's made over 10, 15 years of false printing of money, artificially low money rates, then good grief, who knows what the consequences will be. They could be here, there, and everywhere. And so I can't speculate on that except to say this is a huge bubble. And by the way, the bubble here is not really reflected in a lot of other markets, particularly emerging markets. China, they're not bubbles. And they're in positive mode as far as our assessment is concerned. Now, they could switch and roll over with the U.S. market, but they're not bubbles, so they don't have the vulnerability that we do. We're pretty unique in that regard.